Hello, welcome to FountainFX on Monday the 24th of February 2014. This week, before I start this week's analysis of the Euro-US dollar, I just want to do a summary of last week and what actually happened. At the moment there's not a lot happening in the marketplace, that's why I'm going to do this. Point out a few things which will hopefully help you with your trading. Key thing is to be able to look at levels as well as direction in the market. So we can see that we've got moving averages going upwards, showing it's in an uptrend on the 1 hour chart. If we look at a bigger time frame, we'll still see it's pushing up. If we look down the bottom here, we've got actually this trend line that's running up here. The trend line at the bottom is the trend line from the daily chart. So big picture, we're still pushing up in an upward trend. That hasn't turned yet. It hasn't shown any real clear signs of weakness. However, we will go into that later on with the next posting today. Now, with the likes of the Euro-US dollar, there was a couple of points that it needed to raise, which was 138 is this strong area of resistance on the big picture, and so we need to be aware of that. We are actually bouncing sideways below that, and the price this last week, it opened at 137.06. And what happened is it opened 137.06 for the week, and it went sideways, literally in a channel of around about 20 points up and down. Didn't do a lot on the Monday. Reason for that was the US markets were closed, so no currency trading from the world's largest economy. So let's go to the right, and we then get into Tuesday. And if we notice, price opened at 137.06, and off that we had a bit of sideways movement, a pullback with the European Open, and it was really from the 137.06 that price then pushed up. You had one opportunity to get in, two opportunities. I'll just check this one. Was the low there? Yeah, three opportunities, and then fourth opportunity here. As price pulled with these wicks all the way down to this level to allow you the opportunity to enter the long trade and then carry on up. The fact that there's long wicks here shows you the amount of buying pressure that was coming in from this level here as well. So it shows that this was a significant level on on Tuesday morning in which to buy, and the price rallied all the way out through the rest of the day, all the way up to 8 o'clock in the evening, where it then started to tail off and just go sideways again. So that was a great opportunity here to then exit and bank around about 40 points worth of profit. Now, in terms of points, let's just explain it. If you were trading $1,000, or in other words 11,000 rands of your money, 40-point move on the Euro-US dollar would generate a $400 profit, or around about 4,400 rands of your money in profit. So you could take 11,000 rands and in one day turn it into 4,400. So that's how currencies work. The advantage of Forex is that now that the price is up here, it doesn't cost you more to enter the market because price is higher. It costs you exactly the same amount. So it makes no difference whether or not you buy down here and then buy up here later on after taking profit and choosing to get back in. Whereas if you were trading stocks and the stock price was, let's say, at 10 rands a share, and you bought it and the stock goes up to 15 rands, and you then sell it and bank 5 rands worth of profit, and then see that price continues to push up, that there's a good strong momentum upwards, and you then want to buy back in, you can't buy back in at 10 rands a share. You have to buy back in at, let's say, 17 or 18 rands a share, whatever the price is then. And so therefore it limits your scalability in terms of your trading when you're trading stocks. With currencies, it's leveraged, it's always the same amount to enter, and it's based, therefore it makes it simpler for you to look at your trade size and therefore the profit that you can get. If we go into from Monday, Tuesday into Thursday, we can see that Thursday, this was where there was some news coming out of the US about the S&P being shorted to the tune of $1.3 billion by George Soros, and so we should have expected, or we were expecting, to see some weakness on the Euro-US dollar, because when you sell stock, when US stocks are being sold, money moves into the US dollar, so therefore it would have been buying the US dollar. Not necessarily for a long-term point, but it could be very much for short-term, and as we can see, for a couple of days the price turned and fell. Now, one thing I want to show on the Thursday's point, which is quite strong, is that we had a high here followed by a lower high, and at this point where price was before, price rallied up, created a low and then pushed higher. So that was the previous low. This low got broken on Thursday, so this low of 137.49 was broken, price pushed down to it, and then it rallied back up, and it didn't get back up into the previous high, so it formed a lower high, which is showing clear indication of a downtrend or a turn in trend, showing some weakness. So what also do we see from this candlestick formation is that we had a bearish candle form from this bullish candle, which is bearish engulfing. So the sellers were overtaking the buyers. There was more pressure down. So at this point you could have said, right, let's take a sell order, and sold off. Then we've got a doji at the very end of the day. Typically we're going into the Asian session, so not a lot happens during that period, as you can see, and so it would have been a good place to bank some profit at the bottom of that had we been in that trade. So that would have only been around about 20-point profit, but still something on the day, and it would have been at the time when you could trade after work in the evening, etc., and see what was happening. So what happens the following day? Price pushes all the way back up, and look, surprise surprise, it comes into this area where there was some strong resistance and price fell, and at the 137.60 where this was, this previous area of resistance, we can see that price just about touches into it before it turns and it falls. So it shows we've got a high here, a lower high, and a lower high, and off these lower highs we're creating lower lows, new lower lows. So that's showing a downtrend. It's all showing the significance of these levels. So in terms of, if we'd have opened up here, switched on at this point on Thursday morning to the European Open, which was here, this candlestick here formation, we could have seen, yeah, it's near to the previous area, the 137.60, where price fell from, and fell from quite rapidly down to the 137.30, creating a new low. So it's a good area to sell short at, and we would have banked around about 60 points from the 137.60 down to the 137, because price then consolidates. It's also hit, remember, this trend line, this upward trend line at the bottom as well. So if we scroll through there, this was Thursday, so we get a nice short off that. We've taken 60 points, great, no problem. So we've done 40 points on Tuesday, 60 points on Thursday. If we got the patience to sit and watch the market all day on Wednesday, we might have taken 20 points at the end of the day. So that's really it. Going into Friday, we don't really see a lot happen until the US in the afternoon suddenly wakes up around about 4 o'clock our time, and puts some momentum up there. But one thing I want to note from there is that, look, we have a crossover of the trend line, which is pushing up, so it's still confirming an upward trend. So we've got a trend line, and we also have the weekly open running along here. So if you remember, the 137.06, a significant number. We also then have a bullish engulfing candlestick, and price then rallies from there. So these are significant things. Look at the candlestick patterns, look at the trend lines, look at support and resistance, look at the direction in which price is going. And we can see also down here the MACD crosses the zero line. It comes down to the zero line, sits there, and then rallies up from there. So these are the things that you need to be looking at to be able to get some consistency in your trading. And from that, price pushes up. We've then got a huge selling wick pushing down here, after which that would have been a clear indication to say get out, bank your profits. So having entered in around about the 137.10, you got out the 137.40, 30 points of profit, thank you very much. And the other thing to note with trading is that if you get out, you can always wait and get back in. There's always another trade opportunity. There's constant trade opportunities happening all the time in trading. So if you can get some consistency in terms of how do you read the market, then you shouldn't ever have a problem in terms of generating an income from this. And that's summary for last week. All the very best with your trading, and thank you from FountainFX.